for discounting future profits and cash flow and so on. We're living in a 4 to 5% world and possibly a 5 to 6% world. Depends on where you are in terms of the maturity of the risk-free rate. So get used to it. I mean, it just means things still haven't, in my view, properly adjusted for that, because there was all this hope that they would start cutting rates in this year. I don't think it's going to happen, obviously, and that they might not hold for some time, and they might not go higher. Well, they're doing all three. That is, they're going higher and they're holding, and I doubt we're going to see much reduction till they're absolutely sure they have inflation back in the jar at 2%. So get used to it.
Yeah, where's the rub? Where's the inflation? What's really causing it? What did you make of that jobs number, Richard? And is it it's not likely to repeat? Could be revised. I guess the inflation numbers.
They always get revised, Joe, as you know. This is why you can't rely on those immediate releases and do, quote, instant analysis, which is an oxymoron. You just have to wait. But I did find that your all's interview with the CEO of ZipRecruiter yesterday to be an interesting sign. Obviously, hiring is slowing down, particularly with the small and medium-sized companies. If you look at the NFIB, the Federation of Independent Businesses reports, they're being hamstrung here, but they still are being pressed on the size of total comp increases. So I think that's where it's coming from. We had a wage price spiral. They're trying to cure it. And the good thing is, Joe, since you have a job, you consume, even though the savings rate has come down, these workers are still consuming. And the numbers on retail sales and others were still very up in January. That's good for the economy. Remember the equation, C plus I plus G plus or minus X. That's all you need to know, by the way, to be a central banker. C is consumption, that's 70% plus of the equation. I, investment, G, government, net exports is plus or minus X. And right now, C is still running pretty strong.
Yeah, the interview with ZipRecruiter. Sorry, Richard. The interview with ZipRecruiter, it was interesting because he was mentioning pressure in small and medium-sized businesses in particular. So that pain is being felt on Main Street right now. I'm curious, Richard, what you think about the higher for longer and specifically the longer part, because it seems like the market and the Feds are on the same page when it comes to the higher part in terms of the peak of the terminal rate. But in terms of the longer, what is your perception of longer? Because right now, I mean, you mentioned the notion of a pivot. The markets are pricing, and Steve Leisman just sent me this data this morning of down bips from the peak by July 2024. So almost a full percentage point lower from the peak reached by summer of next year. Does that make sense to you?
Well, Steve always makes sense to me, but no, that doesn't make sense.
The data is the data, but I mean, do you think that the markets are pricing that incorrectly?
Melissa, you and I have talked about this on your own show. It's the markets can price. Markets are never correct. It's an immediate reading in terms of going out that far. That'll change over time. Just as the markets were, pricing in for a while, a stoppage in 2023. Actually a cut in 2023. The Fed funds futures market has not been very accurate. Part of this is because we're just, I want to repeat this over and over and over again, we are adjusting to a new world. And we have a whole generation. If you're under 45, you've never seen anything but free money and no inflation until recently. That just changed the way you look at things. And you have to start now really looking at this not as markets, but as a market for stocks, as we just saw with NVIDIA. That's a great little performer. And the overall market, however, is still, in my view, priced to a different scenario from what I think is going to obtain, which is a higher rate, a couple more quarter point increases, and then hold until you're absolutely sure that you have inflation under control and you're willing to tolerate some unemployment rising, if that's the case, but still we're fully employed. And that's good for the economy and it's good for these workers, but it also creates pressures.
Maybe we should go 50 then. I mean, what you're describing is we're definitely going to end up higher. Now it's the old, you got an infection. Why would you do, 25 milligrams of penicillin like 8 times? Why wouldn't you just do a stronger dose? You think we need to go to 6? Let's get to 6 then.
Joe, I happen to be allergic to penicillin, by the way, so terrible analogy. But no, I think what they're doing now, titrating, they did those big moves Now they're refining and titrating their rate increases. I don't think it's out of the realm of possibility they might do 50. I think it's extremely doubtful. And I think you just are adjusting more closely the tightening of this. You also still have the runoff at a cap of 60 billion for the treasuries. So, I think you just take your time here. These are a group of wise people that are just
dependent, Richard. And you'd still be data dependent. I've said this like so many times in the past couple of weeks, but things happen gradually until they happen all at once. I mean, you could see, if you listen to Barry Sternlicht, and he's a real estate guy, but 6 months ago, I thought the world was ending in terms of the economy. Sooner or later, it will slow, and you will see a bite, don't you think?
Yeah, eventually. That's the nature of a business cycle. And we'll see if the Fed can encourage it to run its normal course or overdo it or prevent it. But I don't, not even God can conquer the business cycle. It's been stretched out with modern technology, but it's still there, Joe.
They said that about the Titanic. I don't think you should say that.
Okay, I'll take Titanic off the table if you take penicillin off the table.
Richard, I have one last question for you, and that is, what does a Richard Fisher portfolio look like in a world where you can get almost 5% in a few years?
Because it's Fisher Investments.
Great question.
Got that great company.
Forget all of Kernan's questions. That was a great question, Melissa.
It's a great question, but Barclays will not allow me to speak of my own money. Sorry. But also bear in mind, Melissa, I'm 74 years old, and therefore I'm pretty risk averse. And I'm finding other people my age and that have substantially more means than I have, very attracted still to the 1 year and the 6 month.
Yeah.
So they wait to see how things clear out. And I don't think that's a bad strategy here, but again, I'm not allowed to talk about money. I'm sorry.
All right, fair enough.
Hold crypto for
Plowing
6
it all into Bitcoin.
No crypto. No
hold crypto for 6 months, or hold crypto for a year. What's the problem? Okay, don't do Ether or do Bitcoin.
The good thing about being trained as a central banker is you learn how not to answer questions. So I apologize on that.
We have a lot of guests that weren't central bankers that know how to do that too, Richard. Most of them are in Washington. Thank you.
Thanks, guys.
See you. Okay.
Thanks.
All right, new in the last hour, the Wall Street Journal reporting Netflix has reduced the cost of its service in more than 36 countries in recent weeks. The cuts apply to certain tiers of service in some markets, including the Middle East, Sub-Saharan Africa, Eastern Europe, and Latin America. In some cases, the price cuts are 50% off.
Pretty good. By the way, I found mine's gone up on Amazon. I'm not on Amazon, on Netflix, I'm sorry to say. Yeah, because if you use more than one TV,
it's
okay. Coming up, breaking